This is something I laughed about, some issue being popped up, but now I'm finding it in my field. Welcome to the Comstock channel. I'm Joe Camp. We're in day one of the heat dome advisories to talk about the impact on markets, lower corn and soybeans off the highs so far. You have the bullishness seemingly being kept in check by the rain that remains in the forecast starting tonight, and I'll show you that. We will keep with weather as the leading focus for traders, but also preview the next several days and the lead into August, some very important events on the calendar. Here's the calendar through August 1st, which will be the last day of the week next week, and also, again, the first day of our next month. Before then, today, tomorrow, we're going to see just how hot it gets under these heat advisories. We know that the heat has not just implications for grain producers, but also livestock. We've got new highs for cattle futures again this morning, and a big day coming up on Friday for the cattle complex, starting with this semi-annual cattle inventory report. We did not have one of these midsummer last year after USDA budget cuts took it away. They were mandated back, and here we'll have another one coming up at the end of this week, along with the monthly cattle on feed update. In the Comstock report this morning, Justin has a good summary of the estimates and also a conversation about what to look out for. So take a look at that. We have as well on Friday the cold storage report. This is going to be an interesting one for me because it'll give us some color on the meat drawdown we've had following Memorial Day and Father's Day and leading right up into the 4th of July. That's going to be a piece for next week's trade. Again, as we close out the weekend with these livestock reports. Next week, crop progress, who cares? It has been a factor that's leaned on grain futures at the start of these weeks. That's been the trend lately for weaker first halves of the week at least. We'll see if that changes this week or if it fits to pattern and we have a bit of a turnaround. But for now, we're working into next week, thinking about Tuesday, an update on trade balance that links with what we'll have in a conversation about tariffs and trade policy changes to come. And then on Wednesday, a big day for the outside financial markets, for all markets, will be our next GDP update. We'll show you a graphic on that. And then the Federal Open Market Committee meeting, FOMC, central bank deciding on interest rates. We'll talk about that. Leading into Thursday, the PCE is a personal consumption expenditure report. A look at inflation, always closely watched. It'll tie into the conversation the next day after the Fed meeting wraps up. On Friday next week, it's not only Jobs Day, as we start off the new month on a Friday, that's when we get those monthly employment reports, but it's tariff deadline day again. We've talked a lot about that. New deals that we'll discuss with Japan and others possibly popping up before that next deadline, but all of this ahead to potentially spark some volatility in the market. We'll watch out for that. Well, this is a map of the heat alerts that are in place, mostly confined to the highest temperatures are to the south, the middle of that heat dome where we have air being pulled down as I read, taking away cloud cover, and I can see it outside. As intense as the heat is becoming, you really have that lack of a layer to protect crops in cloud cover today and tomorrow. But after that, more rain on the way for even this region, colored in the map, and even starting tonight for the northern plains and the upper Midwest. If we look at the precipitation forecast, we have these sort of ridge riding rains, and I've read about that, right, that can pop up outside of the heat dome along the edges, and that seems to be what we're looking at with the Dakotas having a good rains forecasted tonight up to an inch, the expectations for a lot of areas, and then on into even Iowa and later tomorrow morning, possibly across the Mississippi River into the eastern Corn Belt. One thing that we have to address when we're talking about weather now is this news of the tassel wrap issue. A look at regular tassels, and then from Kansas State, some overly tight wrapped tassels. And if you Google tassel wrap, tight tassels corn, you can see a lot of articles popping up about this subject. And the anecdotal evidence, what we hear from farmers, what I read on social media, this is becoming a more widespread issue. If you run a search the history of this tight tassel wrap term does not have a well-defined history, a previous year when this has been popping up. Now it can become something in the news, something more than it is, we'll hope. But for now, it's really something that's garnered more and more attention. And you talk about, online social media, seeing these farmers say, this is something I laughed about, some issue being popped up, but now I'm finding it in my field, and I can't believe what I'm seeing with the way this is possibly disrupting pollination in a big portion of certain areas. And those areas include parts of, though, anecdotal evidence, again, Kansas, Nebraska, Missouri, Illinois, Indiana. So from Kansas to Indiana, we can get into the north as we've got more advancement, find even more of this problem. But it's when you think about the high temperatures coming in between what has been such a wet pattern, this overly tight tassel wrap issue is something that I think can have some lasting influence, as at least a talking point, something that could keep in check what were just a couple of weeks ago some very lofty and rising yield estimates that we could still very well reach, but all of a sudden pumping the brakes a bit weather-wise this week. From weather into the economy, look at GDP growth, real gross domestic product. That's the report that we'll have next week. I bring this up because this is going to be a more closely watched report than usual, given that the first quarter reading of GDP was of contraction, of negative growth. You have a little bit of a dip there at the end of the uptrending line. And if you have 2 quarters of consecutive GDP contraction, that's the definition of a so-called recession. And that's why we're looking out for the second quarter reading to show a rebound, otherwise to confirm that we could be inside a recession, inside, as you see on the graph over the history of the economy, these shaded columns being the recession periods. So a lot of question about the overall economy, especially as it has something to say for interest rate policy. That Fed meeting mentioned coming up, there's so much pressure on Jerome Powell, all of a sudden political pressure from, in part, President Trump. We've got a Truth Social post where he continues to, as recently as this morning, called Jerome Powell too late. Because of his reluctance in Trump's mind to lower interest rates and his leadership on doing that. Given that, as Trump mentions, you have an impact on families and the economic influence and the overall cost, especially to the government, of servicing the federal debt. And Trump mentions that more pressure on Fed Chair Powell to act, but not the expectation of the market that will have a interest rate reduction this month. Instead, the next item here to be watching for on the calendar would be Friday and the next tariff deadline day. That's when these reciprocal tariffs are going to go into effect unless there's been a trade deal struck. And in this case, this week, we've had Japan, the latest new trade deal worked out, and that coming to the relief of the agricultural market, yes, but also not a big bullish spark at this point, given that you have the grains down. There's some talk about, well, this doesn't necessarily take Japan away like we could have seen from the U.S. market for agricultural goods, but it doesn't necessarily promise that they're going to be buying any more. Although, again, to have the confirmation that Japan is still very much likely to be a top customer. You can see Japan underlined here as one of these trade deals reached for the top buyers of U.S. agricultural products. They're on every row here: corn, soybeans, wheat, beef, and pork. So very important. A few others that have popped up: Philippines this week, Indonesia previously. Those big ones are standing out, though, and that includes Mexico and China. China, the back and forth here on trade policy this week is about not that they have the August 1st deadline, but they have a mid-August deadline that could be potentially expanded into mid-November. What's that mean for late summer soybean demand is, of course, the ongoing question for traders in this market. So there's a lot still ahead, tariff deadline day and everything before then, and a lot that could, again, spark market volatility and market reactions, something that could potentially at some point spark a turnaround if we could underline some more of those countries for having trade deals before August 1st. I hope so, but I also hope there are, as alluded to, some more clear wins carved out for U.S. agriculture. And I also hope that we do have more certainty about having China back in the U.S. market in a bigger way before the end of the summer. So those are outstanding issues, along with everything else, the Fed meeting, the other economic reports that we've got coming up to digest, and obviously very volatile potential start of the month of August that we're now knocking on the door of. You've got something to talk about, I'm sure, next week, and I'll be back on the Comstock channel for that. Visit me there. But also, as mentioned, premium subscribers and the videos that we have with our Comstock report, check that out. The link here, or visit our website at comstock.com.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.